Okay, so taxes and gifting, not exactly like a thrilling combo, right? But imagine this. That knowledge, that like tax and gifting knowledge could save you like thousands,
Yeah,
maybe even tens of thousands of dollars.
absolutely.
That's the kind of power we're talking about here.
It's huge.
It's the power of understanding how gifting, like how that can be a tax stream,
Yeah.
or it can be a total tax nightmare.
Yeah, totally.
And today, we're diving deep right into this whole world.
Love it.
We're looking at a specific scenario from a Skloff Financial Group article,
Okay.
all about gifting a mutual fund,
Interesting, yeah.
to uncover like how these tax implications really actually play out in the real world.
Yeah, it's fascinating how something, intended to be such a generous act
Right.
can become a very costly mistake if you don't understand what's going on.
Right.
Like, we think about taxes, as something we each deal with individually,
Right.
but gifting is different. It's not just you. It impacts the person you're gifting to.
Totally. And it's not even like just about like knowing the rules, right?
Yeah.
It's like, how do I use these rules? How do I strategize?
Yeah, exactly.
And that's where our deep dive comes in. Right?
Okay.
So the article, it gives us this like hypothetical,
Yeah.
but it's a very realistic scenario.
Okay.
Okay.
Yeah.
Let's say you've got this mutual fund, right?
Yeah.
And it's grown. It's now worth $18,000.
Okay.
But you didn't buy it for $18,000.
Right.
Right. You paid, let's say, $5,000 for it originally.
Okay.
So that original price, that's called the cost basis.
Right.
And the difference, that's where it gets interesting.
Because.
You've got a $13,000 gain just sitting there in that investment.
Right.
And if you sold it, well, the tax man's going to come knocking,
Yeah.
right? You'd be paying taxes on that $13,000 profit.
Capital gains taxes.
Exactly.
Right.
But here's the thing about gifting, those potential taxes, they don't just vanish into thin air.
Right.
They become someone else's problem.
Right.
Or, and this is the exciting part, they could become a fantastic opportunity.
Okay, I like where this is going.
It all depends on who you decide to give this gift to.
The plot thickens.
Right. This is where the article gets really interesting. They talk about tax dream and tax nightmare scenarios.
Tax dream, tax nightmares.
And trust me, the differences are huge.
Okay, so walk me through this. Let's start with this tax dream.
Okay, imagine you're in a higher tax bracket.
Okay, I can imagine that, yeah.
And you want to be generous,
Yeah.
right? You want to gift this mutual fund to someone who's in a lower tax bracket.
Okay, I'm with you.
Maybe, like, your child, just starting out in life.
Yeah, makes sense.
They're probably in a much lower tax bracket than you.
For sure.
So in this scenario, how does that benefit, like, both sides?
Well, let's break it down.
Right.
First, you, the one giving the gift, the donor, you're potentially avoiding those higher capital gains taxes.
On that $13,000.
Exactly, that's right. And because your child, the one receiving the gift, the done, they're in that lower tax bracket, they might pay very little in taxes when they eventually sell the mutual fund.
Oh, interesting.
They might even pay nothing at all.
Really?
Yep, it all comes down to those income levels, those tax brackets.
So it's a win-win.
You could say that.
Yeah.
You potentially save on taxes, and they potentially pay less, maybe even nothing, simply because of the difference in your income levels.
It's like a double bonus for being generous.
Exactly. It's smart financial planning. That's all it is.
Okay, smart. I like it.
And it just goes to show how important it is to really think about the tax implications for both sides, especially with these assets that have gone up in value.
That makes a lot of sense. So we've got the dream scenario, but I'm a little afraid to ask, what about the tax nightmare?
Yeah, it's not always so rosy.
Okay, so let's flip the script then.
Okay.
Let's talk about this tax nightmare.
All right.
What if the person I'm gifting to, the done,
Yeah.
what if they're in a higher tax bracket than me? Like, let's say it's not my kid, it's my sibling.
Right.
And they're super successful.
Ah, okay. I see where you're going with this.
So I want to give them this mutual fund, same one.
Right.
Does that still work out?
Well, not necessarily.
Uh-oh.
This is where things can get a little tricky. Gifting that appreciated mutual fund,
Yeah.
it might actually backfire.
Backfire, what do you mean?
Well, remember that gain we talked about? That $13,000?
Yeah, the profit.
Instead of you potentially paying a lower capital gains tax on that,
Right.
it's going to be your sibling, the one who gets the gift.
Yeah.
They get hit with those higher taxes when they sell it.
So the taxes, they shift to whoever's in the higher bracket,
Exactly.
even though they didn't make the money originally.
Unfortunately, that's how it can work out.
Wow.
And to make it even more real, let's put some numbers on it.
Okay.
Let's say your sibling, with their high income, They're in the 20% capital gains tax bracket.
Okay.
Plus, they've got that extra 3.8% surtax because their income's so high.
Surtax, right? Because of the net investment income.
Exactly.
Okay.
That's a total of 23.8% they're paying on that $13,000 gain.
Oh, wow. So instead of like 0% that my kid might have paid,
Huge difference, right?
it's a huge difference.
All because of who gets the gift.
Wow. So their tax situation is like the most important thing.
It's a major factor, absolutely.
Okay, so before I even think about gifting anything that's gone up in value,
Right.
I need to know what their tax situation is.
It's crucial.
Or else, like, I could be giving them a big tax bill with this gift.
It's all about being financially savvy, not just generous.
Right. Because what seems like a simple thing, like, oh, here you go, take this.
Right. It can have all these unintended consequences.
And those consequences are expensive.
That's why talking to a financial advisor can be so helpful.
Okay, so they can help you, like, figure out the best way to do this.
Exactly. They can see those pitfalls you might be walking into.
Because this is starting to sound really complicated.
They can help you come up with a plan, make sure your generosity doesn't backfire.
Okay, so it all goes back to what we were saying before. It's not just about what you make.
Right.
It's about what you keep.
For yourself and for your loved ones.
Exactly.
It's all about those informed decisions, making sure everyone benefits.
So, like, are there times when maybe holding on to the asset is actually the smarter move?
Sometimes, yeah, maybe waiting until the tax situation changes.
This is a lot to think about.
It is.
So for our listeners who might be feeling overwhelmed right now,
Yeah.
what's like the one big takeaway here?
Well, if nothing else, remember this.
If there's one big thing to remember from all this,
Okay.
it's that gifting, well, it's about more than just wanting to be nice.
Yeah.
You got to be smart about it, strategic,
Yeah.
especially when you're talking about assets like that mutual fund we were looking at.
Right. Those capital gains, they don't just disappear.
Exactly. It got me thinking, it's not just mutual funds, right? Like, what about stocks, real estate, anything you buy that goes up in value that could have these same tax implications?
Yeah. Absolutely. The principle is the same. We're not saying everyone needs to become a tax guru overnight or anything, but just recognizing that there are these like financial ripple effects. That's huge.
It's like those things you don't always see coming, right?
Exactly. Like you want to gift your grandma's old stock certificates. Sounds simple enough, but who knows what could happen down the line, tax-wise, if you're not careful.
And those consequences, they can be good or bad, right?
Yeah.
It all depends on what we do today to prepare. So I want to ask our listeners, think about what you have, any assets that have gone up in value since you got them. Maybe something you're planning on gifting to family down the road.
If that's you, this is your cue to start thinking strategically.
Right, get ahead of the game.
Who are you thinking of gifting to? What do their finances look like? Would it be better to wait a few years? All important questions.
Don't be shy about reaching out to a financial advisor, talk through your specific situation, get some personalized advice.
They can help you untangle it all, make those informed decisions that really align with your goals and your values.
Because at the end of the day, financial planning, it's not one size fits all.
Not at all. It's about finding what works for you, your family, your circumstances.
Well, this has been like eye-opening, honest.
It definitely makes you think.
We only really scratched the surface with gifting mutual funds today. But it really gets you thinking, imagine all the other scenarios, right? The different assets, different situations where this knowledge is super important.
It all comes down to thinking long-term, really understanding the tax implications of what you're doing, even when it comes to something like gifting.
Absolutely. And with a little planning, a little expert advice, you can avoid those tax nightmares, turn them into tax dreams, and really make sure that your generosity is actually benefiting everyone involved.
Couldn't have said it better myself.
Well, that's about all the time we have for today's Deep Dive. Thanks for joining us.
It was a pleasure as always.